Afternoon, everyone. Thank you very much for taking out your time this afternoon to join us on this investment readiness for private sector finance webinar. And thank you for taking out your time. We'll start as more people are joining in. My name is Kamal, and I'm the acting CEO for Investment Fiji, and I'll be coordinating this afternoon's event. Just a few housekeeping rules before we start proper. Please keep your mics muted and type in your questions if you have any on the chat box. And there will be around 15 minutes at the end of the session for the team to answer your questions. One of Investment Fiji's obviously mandate is to match high impact capital investment with Fijian businesses and opportunities. Therefore, this webinar is important to ensure that we do match Fijian businesses with capital investment. Local businesses are aware of how to get their projects to at a stage where it's investable that is required for private sector investors. So we are really grateful today to have some very good and highly qualified people on this area. So thank you very much, Jody, Anton, and Paul for joining us. And Paul and Anton, I believe, are joining from Austria. Thank you very much for taking out your time and joining us. So, and then I'll hand over to Paul and Jody to maybe see how we can. I'm not sure if Jody has dropped out. She's back, but we'll be happy to, Paul or Anton, if you want to start, and then you can take over and present. Thank you.
Amal, thank you so much. Investment Fiji, thank you so much for inviting us to this webinar. I'm dialing in from Diumba. I think everyone's on Facebook right now, so I apologize if my internet is a little bit sketchy. I'll start the screen share, and if someone can let me know when it's up.
It's up.
Fabulous. Okay, well, welcome everyone. Today, we at Matanataki are going to share a little bit about getting investment ready as a private sector business to receive mostly impact focused investment, but equally this could apply to any type of investment. But what we are seeing is that impact and that investment is becoming more and more impact focused. So investors are wanting not just to see financial returns, but environmental and social returns. And so we'll be talking through that. So firstly, just a little bit about us. So who are we? Well, Matanataki is the Vakaviti word for action. It was inspired by the Talanoa dialogue. Talanoa is very, very important, but even more important, I think, is that Talanoa is followed by Matanataki, or action. So we're an investment and business development partnership for businesses in Fiji. We are a partner to WWF's Great Sea Reef Resilience Program, as well as an implementing partner to the UN's Investing in Coral Reefs in the Blue Economy. But I want to stress we are not an NGO. We are not public sector. We are very definitely private sector. We are entrepreneurs as well. So what we do is we bring investments to projects, and we also help businesses develop so that they can be ready to receive investment. And we focus on the impact being resilience of Fiji's reefs, because Fiji's reefs are some of the most important in the world. So our pipeline, which is all our businesses in our deal, are up to about 100 million US worth of the investment that they need. And we focus on sectors such as waste and plastics management, fisheries, agriculture, and tourism. So we offer investors and donors access to these investments, and we use a blended finance approach, and we'll talk a little bit more about that later on. So who's the team? On the call today, you have myself, Paul, and Anton. Paul is a very seasoned conservationist, but he's a rogue one. He looked at the way conservation was done. He worked with WWF for many, many years, but he looked at the model and he said, something's not working. Things are getting worse, they're not getting better. And what Paul realized was private sector really had to work alongside conservation organizations in order to deliver solutions. Anton, who's also on the call today, has over 10 years in corporate and investment banking, Anton is fondly known as our human calculator. Peter, who's not with us today, he focuses on incubating businesses in low-income economies. One of the things that we saw as a real bottleneck in Fiji was there was the lack of knowledge in terms of how to get investment ready. And then once the investment is received, how to actually manage the growth of your business. So this is something that we do as part of Matanataki. And I am actually Fijian. My great-great-grandfather was the first Fijian man here. I come from a long line of entrepreneurs, and I came here 10 years ago to turn around a failing business, which some of you may know. It's called Renandi Plantation in Diomba, and I'm still here. I didn't want to leave. So, as I mentioned right in the beginning, investors are increasingly looking for measurable environmental impact, social impact as well. They don't want to see only financial returns. So these two programs that we're associated with, they want to know, how will your business address threats? So if we're going to invest money into you, how is your business going to address the clearing of habitats, the destruction of habitats? How is it going to address unsustainable production or overfishing? How is it going to address waste? So I'm now going to hand over to Paul after that quick introduction, and he's going to talk about landscapes and business.
Oops, turn off the mute. Thanks, Jody. Bull of Fiji. I don't usually get up this early in the morning. It's six in the morning in Vienna, Austria, but for Fiji, I'll do it. I've worked with Fiji for a very long time, and very excited about what's happening through Matanataki. I've just been at the climate COP in Glasgow, and the world is looking for exactly the sort of programs and initiatives that Matanataki is doing, and I hope we can engage you in it. So landscapes and business, our approach is to strengthen private sector impact for climate and environment. So we do that by looking first at the full landscape, where you're working. How do we protect nature? How do we make profit? How do we look after society? Second step is to create a vision, and then look at the costs and returns that are possible from addressing some of the problems in that landscape, and developing products and support for those activities. That's the landscape approach. So I'll take you a little bit more into the landscape approach. The good news in Fiji is that a lot of that work is already done. We've looked very carefully together with the government and many other stakeholders at the landscape, the Great Sea Reef of Fiji. We've developed a vision together and have some pretty good understandings of the costs and returns. And now we're looking at products and support and how to engage a whole range of businesses and community groups in taking action to protect the reefs. Next slide. Thanks, Jody. And we do that by framing the landscape work, by making sure that the protections are in place, the safeguards, looking at the impact targets and lining up with what the government wants to achieve. So there's 3 steps, 4 steps, I should say, here that we're going through. Next slide, please. And the landscape approach. So the world is retooling around the landscape approach. You'll find that most environment groups in the world are now applying the landscape approach. Many of the world's businesses are now taking this on as standard practice, and governments as well. I'll go into the details of it in a minute, but effectively it's about having a common vision that we all work towards. In the case of Fiji, it's securing those reefs. They contribute to half of the economic value of Fiji from fisheries and tourism, and they're struggling with climate change. We're lucky that They're one of only 7 reefs on the planet that will survive climate change, but that's not guareed unless we take action to get rid of some of the pollution that's now affecting it, the silt and organic fertilizers and so on. So building a collaborative program is the next step, and then getting financing for that, blended financing, which means public and private financing and performance financing. So there's new types of financing coming down the line for carbon, for biodiversity payments and so on. And if you do all of that, it de-risks the environment for business. Next slide. Thanks, Jody. So you can read more about the landscape approach in 2 books that we've put out, the Little Sustainable Landscape book on the left and the 4 Returns Framework. I won't go into the details of them, but just to say that this is a generational process. We look ahead 20 years minimum to define what we want to achieve as a community and as a group of stakeholders. We go through a 5-step process, the 5 elements, which I've gone into. We define what areas we want to protect, what areas where we want to produce, where we want to regenerate. And all of that helps us to achieve the SDGs, the 4 returns: social, natural, inspiration, bringing back hope into the landscape. Next slide, thanks. So nice in theory, but how does that actually work? Well, here's an experiment we did when we started the Landscape Finance Lab. Back in 2016, we teamed up in Indonesia, in Sumatra, with the rubber country, the tire company Michelin, the French tire company, and their local offshoot, Lestari Pacific, to design a program to help them protect their the landscape around where they work and achieve sustainable rubber production, wildlife-friendly rubber. They had a real problem that the rainforest near their plantations was being damaged, and they would get blamed for that. So how can they help to protect that? How can they build a new product that they can sell on the market as green rubber? And how can they get the financing for that? Well, the story turned out much better than we'd expected. They secured $215 million as a sustainability bond to invest in transforming their rubber plantations, but also in restoring rainforests on the side of those plantations and helping to protect the national park to the north of their plantations. Now, that park is one of the only places where you find tiger, orangutan, and elephant, and it's exciting. But why did Michelin do this? Well, you can see the list there of things that they got out of this. They got rid of the risk, or they're getting rid of the risk of the rainforest loss and the blame that might come on them. They got access to much larger finance at a much cheaper rate. The government got on board, so they sorted out all the regulatory problems, stakeholder engagement, shared value. Everyone's working together towards the same end, rather than seeing this big bad company in the middle of the communities. Stronger stories they could tell the world, and that created new markets. So this was quite exciting. There's a few hitches, but we won't go into those. Next slide. And so the theory of this is that you bring together a set of commercial activities. So those grey boxes there are commercial activities. This is an example for the reefs of Fiji, for instance, just hypothetically. So timber production, carbon projects, sustainable fishing, organic cropping. You work with non-profitable activities, so grant-based activities that community groups can lead, such as mangrove restoration or reef protection, land tenure clarification, and so on. And you group them together so that you're working to achieve larger goals, sustainable development goals, which might be restoring forests or reefs or bringing organic agriculture. And all of that works together to achieve the overall goal, which is the landscape, in this case, saving the reefs of Fiji. And importantly, if you just work alone at the project level or your business level, you can only access a certain types of finance, grants, impact investment, commercial loan. If you put that all together, you can get to a much larger scale of finance, investment funds, special purpose vehicles, guarantees, and so on. So it gets much more interesting. Next slide. Thanks, Jody. And just to show you where the world is heading with, under the new agreement from Glasgow, this is some work we're doing in Ireland with the government of Ireland, and it's quite similar to what's already underway in Fiji. In fact, you're ahead. So the peatlands of Ireland store vast amounts of carbon and are very important for all sorts, for biodiversity. What we're doing is working with the government to create an integrated solution for climate, biodiversity, and livelihoods. We're combining different finance streams, public investment, carbon credits, commercial finance, and funding activities across 4 sectors: the energy, forest, water, agriculture, and delivering integrated results. So carbon, biodiversity, water. What's interesting now under the new Paris Agreement or Glasgow Agreement is that you've not only got credits for carbon, but you'll see credits for biodiversity and water and other values as well. And that works at the landscape level. We're doing that with the European Investment Bank and the Government of Ireland. So what's happening in Fiji is very similar already to this, and that's what Matanataki is working on. Next slide. And so let's be honest. I mean, working on landscapes is slow, it's costly, it's difficult. You as a business don't have to take that burden. That's what we're doing with Matanataki and with WWF. But if you do get engaged, there's a whole range of benefits. The increased efficiency, reduced costs, accessing finance, creating synergies with other businesses. So we've found that the fishing industry and the forestry industry and the agriculture industry all benefit by working together in Fiji to save the reefs. Better SDG impact and performance tracking, strengthening social license, securing sources of supply for the products that you need for your products, and then ultimately benefiting your community. This is about giving back to your community as well in a much more strategic and integrated way. So we hope you'll join with us with Matanataki, and I just want to say that you're very lucky to have Jody with you. She's one of the most remarkable businesswomen on this planet and thinkers on landscape initiatives. So back to you, Jody, and thank you, Fiji.
Thanks, Paul. So we've given the high-level vision and we've set the stage for where investment is going. And now we're going to start drilling down and going a little bit deeper and a little bit more detailed. So I'm going to talk to you about vision and strategy, business planning and market validation. So whether you are a startup or whether you're a mature business needing to kind of reposition yourselves in order to find investment, all of this applies. So always start with your vision and your values. What we have here is it's actually from an internal vision document. I had a career in film, so I chose to tell and share my vision to the team using Star Wars. Take the time, clear the decks, really allow yourself to dream big and define what your vision is and what your values are. These are the most important things that you will have going forward with your business. And then to the big picture, what Paul has just talked about, ask yourself, how can my business vision and values contribute to this new sustainable economic ecosystem for Fiji? And this is one that needs to deliver for all of us. It's got to deliver on human well-being and dignity. It's got to protect and regenerate the land, sea and air resources that we all share and depend on. So there are 3 phases. So before I jump into business planning, I'll talk about the 3 phases to achieving your vision. There are 3 phases, and they generally overlap. They take different amounts of time, but sort of anywhere between 1 and 7 years to get through these. And they're defined with specific activities and milestones. So the business planning is actually your first key step in these 3 phases, and it's going to determine what you're aiming for, how you're going to get there, and who's going to be with you as you deliver this. So the first thing is create your platform. So this is, you'll start here with your business planning, so your vision, your values, then you will do your strategic and your execution planning, and take the time to do this. It's really important. Like when you're running a business and you're in the weeds, it's so hard to step back and go, oh, because you just think you don't have the time, but you must. It's really, really important. And because this is also what you need to sell to investors, that you have very clear vision, strategy, and execution. So you also need to build your governance structure, and then you need to recruit your team. And if you already have an existing team, you may need to look at, okay, who needs to stay and who needs to go. And always remember, technology is great and ideas are great, but they're nothing without people. People are your most important thing, as I'm sure most of you, if not all of you, know. What happens between people is really like the fire of a business. And also ask yourself, can you innovate? Have you got the right money, the right capital? Have you got the right team? And what is unique about what you're offering? So in the next phase, you want to scale your profitability. And this is where, why it's so important to have a business plan, because you need to go back to it. So your business plan is a living document. It's got to be something that you go back to, and then you're going to revisit. You're going to look for those gaps, and you're going to need to bring in expertise to fill them. So really forecast, implement, report, and then again, take the time, reflect, and figure out what was wrong. How do you need to correct it? And ask yourself, okay, what was important? What worked? What didn't work? What am I going to keep? What's going to go? And most importantly, stay passionate, because your drive and your determination is what's going to really create the value in your business, and it is what is going to inspire your team. Third phase, realizing the impact and realizing the value. So you're going to be able to realize impact and value if you've got the right people around you. And one of my favorite lessons from the All Blacks, who are arguably the greatest sporting team in history, and I know that's a really dangerous thing to say in this platform, but the All Blacks, if there were 2 players going for one position, and one person was more skilled, but the other person had the right attitude, and he was there playing for the team and for that jersey, the coaches would always choose the person with the right attitude over the person with the right skill. You also need to trust your team to deliver, and you need to teach them to stay focused. Always demand excellence, but do it in an inspiring way. I've lost far too many team members learning the hard way that demanding excellence must be done in a way that's kind and inspiring, rather than kind of hammering it into people. So remember humility. And again, another All Blacks lesson, the person who cleans the locker room is the captain. Richie McCaw used to clean the locker room. Engaging face-to-face is always really critical as well. Delivering impact, delivering value in business is about people. And I think in this age where so much of what we're doing is remote, as much as you can, remember to be face-to-face. Right, so now we're going to go into the business planning phase. So we always start with a business model canvas. You can find these on the internet, and they're a really great tool to go through. So when you do this, bring in your key team, whether they're board members, whether they're managerial, your key people, bring them in and develop this. Now we have a kind of version 2.0 of this, and this one brings in things about, sustainable regenerative impact. What's key with this is, there are subsidies that are available. I'm sure you will have all heard about different subsidies available to businesses that are in more sustainable or moving into sustainable areas, whether it's agriculture or recycling. There's also a premium that you may be able to get on your revenues if you are sustainable or regenerative. Okay, so your business plan do's, and I'm going to talk about the do's and not the don'ts here. Number one is prepare and complete your business plan. It's very easy to go, oh, this is really hard work, and it's, you know, I'm a doer, I'm not a writer. But take that time and really commit to doing this, because this is going to be an important selling tool for you. Anton will speak a little bit later about the financial model and the pitch deck, but essentially your 3 key documents to investors are your business plan, your pitch deck, and your financial model. So with your business plan, you can find templates online. Just choose something that feels right to you. Then secondly, get advice on your business plan. Go to experts that you trust and experts that are going to give you honest feedback. Then third, really articulate your strategies. You want to keep it simple. You have to spell out how you're going to deal with potential adversities. You want to ensure that your strategies and your execution do not conflict with your values. Now, take a note of that when you're working through a business plan. Like, think that through, because this is quite a key point. It's often quite, values can come into conflict, particularly if you're trying to do things like cost saving. So really be clear on what your values are, and try and work out ways that they aren't going to conflict with your execution. 4, define your management team and be really honest and clear. What are the strengths and what are the weaknesses? And where you do see gaps, define how you're going to fill them. Include a monthly budget and cash flow projection. I'm actually going to let Anton talk about that. I can do those P&Ls, but Anton's also going to talk to you about the type of financial model that needs to be done for investors. They're slightly different. And then number 6, test your plan. So even if you're a mature business, but you're bringing on some new ideas, go and test these, and don't commit too much money before you've tested and you know that what you're planning is going to work. And the other thing, be prepared to modify your plan frequently. And I'm sure you all know that. It's like you might plan several years in advance, but you know you're going to change it in 3 months. Okay, so the 3 greats. Now these, I'm a very big fan of Steve Jobs from Apple, and I've learnt this from him. Your business plan has got to be a roadmap that shows both your team and your investors how you're going to deliver on the 3 greats. So you need to have great products or services. You need to have a great distribution if you have products, or a great network if you have services. And you have to have great marketing. So if we look at products and services first, do your products and services excite you? Now, they have to excite you. If you're not excited by what you're doing, no one's going to come along for the ride with you. And is your plan to deliver your products and services, is it simple and is it focused? Because if you can't understand your plan, don't expect your team to. That's very, very important. Then a great distribution or great network. So does your distribution allow your customers to tell you what you want? And does it allow you to respond to them quickly? And if it's in the case of services, are you looking after and are you nurturing your network? And then marketing. I'm a big believer that your marketing has to convey your values, and this links back to talking about the landscape and why the landscape approach I think is really so valuable, because if we're linking as a business back to these values which relate to creating a new economic ecosystem, creating saving a reef, creating longevity for reef-side communities. These are values that are going to sell your products and services. I mean, people don't really want to be told about your products and services in many ways. And this is where Apple was a very, very brilliant at marketing their products. They never talked about price. They never said, oh, our product's better than the competitor. Our products, are good for you. They spoke about values. And my next slide, we tested it earlier. It can't be played, unfortunately, because there's a time lag. But I'd like you all to go and have a look at the Apple 1984 commercial, because this says nothing about the product at all, but it sells the values of the company. Oh, sorry, last one. Okay, last slide from me. I wanted to end with a bit of inspiration about innovation. I think it's something that we can be quite frightened to do, but where we're going as a planet is that we do need to innovate. So, ask yourselves. Oh, sorry, no. You don't just need to know your market. I think don't be scared to innovate is the key message here. So Henry Ford said, if I asked my customers what they wanted, they would have said a faster horse. So Henry Ford, of course, was the person who built the first car. So he knew his market, but he also knew that they had never seen what he was offering. So don't be scared to innovate. And if we do this, if we really innovate, then we as a private sector are going to be able to deliver the sustainable economic ecosystem that Fiji needs. And another point, and Anton is going to talk about presentations in a moment, my last Steve Jobs quote, he said, if you use anything smaller than 96 point, you're not going to get your message across to people. It should be that simple on a screen. So that's a little tip for when you pitch. Anton, over to you.
Thanks, Jodie, and thanks Investment Fiji for having us today. And hello, everybody. My name is Anton, and I'll touch a bit on the more technical side of preparing your business planning, but then also pitching and negotiating with investors. And now, as Jodie said earlier, sometimes doing documentation for an entrepreneur sounds abstract, and writing a business plan or doing a financial model sounds a bit like too theoretical an exercise. And what we always try to do is say that this is your North Star, more or less. This is how you define your path forward, but that doesn't mean that when you navigate, your boat, it won't take turns, and it will go here and there. But the idea is just to have something that you can where you can synthesize your projections for the future. And when we, as you see at the top of the slide, we're saying financial modeling should be reflecting entrepreneurial reality in numbers. It shouldn't be a theoretical document. It should be trying just to help you understand what do various assumptions, various strategies, various tactics that you use result in the profitability of the company, its sustainability. And that's obviously very, very important to investors. So when you start preparing a financial model, the industry standard is a 3-statement model. So you need to show a profit and loss statement, you need to show balance sheet, and you need to show a cash flow statement. And the length of that projection or of that model should be basically aligned with the length of the investment horizon that the investor would be looking to. So, for example, if you're looking for a 5-year loan, you may want to project into the next 5, 6, 7 years. But if you're building an infrastructure asset for the next 50 years, then usually the financial modeling will cover the next 50 years as well. So that's it. Obviously, we can't run an entire financial modeling seminar here, but I just wanted to share some principles around doing financial models. And the first principle that I always do is start simple and add complexity later. So you can really start by saying, I will sell products worth of $1 million Fijian dollars in the next year. and it will be 1.2 in the year after, and it will go up to 3. And start with that baseline number and see where the model takes you. But over time, you can say, okay, I will then add complexity to that, and I will drill down into the details. What does that 1 million in revenues mean? Well, that means selling maybe 500,000 products at $2 a price or price points, or maybe you can then drill down into several products. You have 3 to 5 products at various pricings, and then it gets more and more complex. But the key message of the model still remains. So start simple and add complexity later. And then the other thing is for investors to be able to believe you in and believe your financial planning, you need to have clear and justifiable assumptions. In your financial model, this should be kind of laid out very clearly, said, okay, I plan to sell, let's say 500,000 packs of gum. And by doing that, I will cover roughly 5% of the market. And why do I believe that? Because A, B, C. So these are all your assumptions that investors can look at and say, do I believe it or not? So clear and justifiable assumptions are important. Then in terms of model flow, this is more the technicalities of the model. It's good when the Excel model just follows a certain logic where you start with all the inputs in your assumptions, that these kind of get churned through a certain calculation, and then you have the outputs. So for example, the outputs of your model could be, this is the cash flow that I have available for repaying the loan. Top to bottom and left to right is just a modeling hygiene that you start your logic from the top and then build your model to bottom, and left to right is usually the time axis. So year today is on the left and year tomorrow is on the right. And then lastly, scenarios. Try to build scenarios and to say, okay, what do certain assumptions mean for my business model? If you're very, very dependent on say on an external commodity price in your business, what would fluctuation in that commodity price mean for your business? If you're very dependent on a certain economy of scale from implementing a technology, what do different volumes of your business mean for your profit margins? So build scenarios to show that your company is on the one hand resilient to adversity, and on the other hand is capturing the upside. So that's on financial modeling. We'll go to the next slide. Which is about pitching. So you have your 3 standard documents, as Joe said: your business plan, your pitch deck, in your financial model. And when you go into a presentation, be prepared, right? Know who you're speaking to. Research about the investor. What type of financial products do they offer? What do they care for? When we speak about impact investors, some people will care for, say, more about the environment. Other people will want to see social impact being created, for example, employing women or creating jobs in coastal communities. So see what your investor that you'll be talking to cares about. There's usually fairly good information on their websites and maybe through your network. Know your numbers. When you present later, you will get questions, and being able to pull out numbers from your business plan very quickly adds to your credibility a lot. And practice in advance. That's always what we do with our partner entrepreneurs, is to have at least one. We've gone up to, I think, 7 or 8 pitching sessions before the actual pitch. Where you can practice, where you can get better at pitching. Then start with why. When you start pitching, start with why. As Jody said, start with your values and then try to inspire first, but then go into the into convincing them with facts. So if you as any person, investors have a limited attention span. So if you get their attention in the beginning, if you get the inspiration in the beginning, it's a much better place to be during presenting the nuts and bolts of your business. Keep it simple. There is the one guide to pitching. There is many, but that's a very simple one. The Guy Kawasaki's 10-20-30 rule, which is you should have maximum of 10 slides, present them in 20 minutes, and the minimum font size should be 30. At the end of the presentation, you should formulate your ask and propose next steps. So nothing can be as wasteful of a time as just going out and presenting your pitch and saying, thank you, if you're interested, call us. Try to engage, try to formulate an ask and propose next steps. So what kind of questions can you expect in an investor pitch? Well, one is your market. And how are you going to approach it? How are you going to win market shares, or how are you going to create a new market? What are the key risks to your revenues and costs, for example? Exposure to commodity prices, exposure to regulation. Every business is different. Why you and why now? So investors, on the one hand, are obviously numbers people, but on the other hand, they're psychologists. So they try to look into an entrepreneur and understand it and assess, is that the right person to actually drive that idea forward? And if you can show that you have the right track record, the right successes under your belt, that's very important. And why now? There's very often things that just happen that open a market or open opportunity, and these are very convincing when you can show that now is the time that this idea will lift off. And in the end, you always need to know, how will an investor get repaid? If it's a loan, it's fairly straightforward. These are the cash flows of the company. We can repay in 5 years. If you have an equity investor alongside you, then you need to show them a clear path to exit, either selling to you or to another investor, or listing on a stock exchange. Maybe is a bit not very common in Fiji, but it's also an option. So you need to know how they get repaid. Then the next slide is your negotiation and discussion with investors. So how do you manage investors? Well, first, don't rely on a single investor. Don't put all your eggs in one basket. That's an awful place to be when you negotiate, because they can do whatever they want with you. The other thing is follow up in ongoing traction. When you have someone, and investors usually get pitched to by a lot of people, if you're able to build rapport with them, to have an ongoing conversation, that's good. At some point, investors will realize that they have spent so much time with you that it would be stupid to not invest. Then know that negotiation is an incremental process in a people's game. So when you go out and pitch, only in films does it happen that the investor takes out their check and writes checkbook and writes a check. Negotiation is an incremental process. The purpose of the pitch is to get them excited and want to look into more detail. And as you provide more detail and as you start negotiating the transaction, know that it's an incremental process that can get you 3, 6, 9 months, with some investors 12 months. Next thing is giving away equity. Entrepreneurs usually hate giving away part of their company, because they see the value in it. They're often emotionally attached to it, but giving away equity has a lot of value. Elon Musk only owns 23% in Tesla, and he has done quite well. Also, when you have another equity investor alongside you, you will have like-minded people who can help you develop and grow the business. So let's say 50% of a million is better than 100% of nothing. And last, understand investors' proposal, and if needed, get advice. Especially if you're not accustomed to talking to professional investors and institutional investors, they might like your project, they might like your company, they will throw or they will come up with a proposal of how their investment could be structured. And some of them may be a bit complicated and not be understandable. So never sign up to anything you don't understand. And if you need advice, get some. So we'll just get to the last slide, which just gives an example of how we work with entrepreneurs and with companies. So on the left hand, you have kind of this theoretical entrepreneur. We have a few of them, and what they would usually do, who they usually would be, is someone who has the operational know-how, knows how to run a business locally, has the network, can manage people, can do all the day-to-day management of the business, and has their own commitment to the business in cash or in kind. And from Matanataki, we would help with business visioning, with planning and financial modeling. We have cross-sector expertise. We have the impact framework, so we can show how your business contributes to ecological and social sustainability, or environmental and social sustainability. We can co-invest together with entrepreneurs, and we can also provide access to finance to our network of investors. And then the joint company obviously interacts with markets, operations, with investors, and has impact on risk ecosystems and a whole heap of other things. But that's just to give you kind of a feeling of how our business works day to day with entrepreneurs. And that's the last of my slides. Thank you.
Thank you, Anton, Jody, and Paul. I think that was really good insight. So Jody, it's okay. You want to add something, or are we going to Q&A?
All good to go into Q&A.
Okay, so if anyone has questions, please type it on the chat box. We'll be happy to, ask our panel here, and I'm sure we'll share the slides. So I'm sure people will have more questions. They can always email you or us, and we can facilitate them. So maybe Jody, I'll start. So just in terms of Fiji, is there any company that you have worked with, with the similar concept, and maybe just talk about some of the mistakes people make here in terms of accessing those kind of funding, and what do they, what are some common mistakes you see, especially in Fiji?
First question on, are there other companies that are similar? Do you mean similar to Matanataki, or companies that are interested to
access the funding, more to access the funding side of things?
I might give that one to Anton if I can.
Yeah, absolutely. Well, obviously, companies generally look for financing for growing their business, but what we see very interestingly in Fiji is that there is more and more focus on sustainable business, on blue and green businesses, of people seeing value in looking to develop a sustainable business case that's good for environment and society, and in turn also attract impact investment from international investors, which means that this investment is particularly geared towards the needs of such green and blue businesses. And we see that that shift towards green and blue, not only from the young startup-ish entrepreneurs. We see that a lot from existing and successful entrepreneurs with successful businesses that either try to grow and transform their main operation, or experiment off balance sheet as a separate venture to do something new and more exciting. So we see both. And common mistakes, Joe, do you want to take on that?
I can take that one. Yeah. So I think one of the very critical mistakes is not taking the time to actually plan properly, and that's very much what we help. We give support for. Not having the right capital, I think, is often a big issue as well. So yeah, diving in, not having enough money to achieve it. Also, perhaps not having the right team or the right expertise to deliver. Yeah, I think for me those would be the main ones. But again, this is what we help the entrepreneurs to identify, and we help plug those gaps.
Thanks, Jody and Anton. We don't have any questions, but if you have any of them, have any question, please, type in. We'll be happy to, get to answer. Otherwise, if you don't have it now, we can always, I'm sure once you send the presentation, if anything, Jody, I'm sure you, Paul, or Anton would be happy to assist people here.
Yeah, we'd be happy to. We just gave a lot of information, so completely understand people may want to take that away, let it digest and percolate. But we're here. We'll share a PDF of the presentation, and by all means, reach out. We're always wanting to hear about new businesses. If we're not working with you already, we'd love to talk and see if there is an opportunity to work with you. So yeah, reach out to us at any time.
Yeah, thanks. I think we will send out the slides. Then, if anything, we'll definitely facilitate. As you mentioned, it's quite a new area for a lot of people here. So there is a lot of information, and it will take a bit of time before they digest it, and then they'll come back to us. I think we're almost finishing up on our time too. So I'd like to thank you, Jody, Paul, and Anton. I know it's too early for you guys. Thank you very much. It was really insightful, and I'm sure it will be a lot of lessons for all of us. And we will definitely, see how we can, from our organization, connect. And if there's anything similar to this, we'll definitely get in touch with you. Jody and Paul and Anton, if you have any, closing remarks that you want to say before we close up.
Oh, maybe I'll start. Fiji, you may feel like you're at the end of the world, but with the work that Matanataki is doing and that Jody is leading, you're becoming the center of a new green economy. So I really encourage you to think big, think green, think how you can fit into some of these remarkable opportunities that are starting to flow around the world, and connect with Jody if you see the possibility to for your business. So thank you, Investment Fiji, for hosting this, and Bulla Fiji.
Thank you, Paul.
Yeah, just from me, we would love to hear from you. So reach out, and we're here.
Thank you. Anton, anything?
Yeah, from my end, just to say why now actually turn the other way around. Why should entrepreneurs act now? We just see a massive tsunami in a good way of sustainable investment going through the world. There was just a massive fund launched, the Global Fund for Coral Reefs, that invests in exactly the types of businesses that happen in Fiji, and that's just the beginning. And we see a lot more coming. So if you go green or go blue, expect a lot of interest from investors. And as Joey said, we're here for you. Thank you again, Kamal, for having us.
Thank you very much. Please have a beautiful day ahead, and we'll definitely be in touch. I think this is a new space for a lot of us, and we will, definitely be working with you all and see how we can assist and get maybe more projects out of Fiji to, tap into those investments. So thank you. Naka.
Thank you so much.
Naka.
Naka.
Ciao.